We found an unusual trade worth $6 million on Snap stock, ticker symbol SNAP, on the last trading day. The company is known for their Snapchat app, and so in this video we will analyze this unusual option activity to find out if this wealthy investor is bullish on Snap and buying or bearish on Snap and selling, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. Now, if you are one of our members, you know that this year, on this day, May 8th, we started to short Snap when it was trading at about $17 per share. And you can see that it is now trading at $11 a share. So that was a very good analysis based on the data at that time. And you can see here, this was the video that we shared with our members only on May 8th. These 15 strike puts, 41,000 of them, that was a very bearish signal because that wealthy investor became very profitable when Snap dropped below that $15 strike price. And we also shorted that and also became very profitable. And so if you want to gain access to our membership trades that have a higher chance of profit, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas at the right time, because even though we are sharing Snap today, it is still considered a lower probability of profit trade in comparison to the trades that we share with our membership, because we analyze other data points to find the right time when there is a higher probability of profit. Now, having said that, let's dive into the data from the last trading day to find out what's going on with Snap. As we can see here on the options time and sales tape, on December 19 at 3 p.m. at the 48-second mark, these 6,094 contracts were the most significant trades, expiring January 24 at the 12.5 strike call, 14.5 strike call, and the 10 strike puts. So let's take a deeper look at the option chain to find out what this wealthy investor was doing. We can see here for the January 24 options at the 10 strike puts, we now have an increase in the open interest from the previous day. So we know that those were opening trades, as well as the 12.5 strike calls. We now have 31,000 open interest, and at the 14.5 strike calls. Because if you take a look at the historical data for these strike prices, you can see that before December 19, at the January 24 options, the 10 strike puts only had an open interest of 34. And at the 12.5 strike calls, there was only 684 open interest, and at the 14.5 strike call, only 8 open interest. So the fact that they increased means that those were opening trades. And based on our analysis, they were selling the 10 strike puts to open and using that premium that they collected by selling it to buy the 12.5 strike call and selling the 14.5 strike call. And when we analyze this trade, you can see here on the risk profile that this trade is a long bullish trade, because here on the x-axis is the share price of Snap stock. On the y-axis is the profit loss. Note the zero break-even line. So when the lines are below it, it is a loss. As the share price goes down, it becomes more negative loss. As it goes up, it becomes more positive profitable. And we can confirm that this is a bullish trade because we can see from the Greeks that we have a positive delta trade. But keep in mind, this wealthy investor hedged their trade. You can see that this blue line is flat all the way to that $10 share price because they sold the 10 strike puts as a cash secured put. And so they would not be at a loss as long as the stock stays above $10. And by selling those 10 strike puts, they are willing to own 100 shares at this strike price, which means each contract required $1,000 of buying power. And since we know that there was 6,094 contracts, we multiply that out and we get a total trade that costs $6 million. But keep in mind, this is still a higher risk trade in comparison to the trades that we share with our members. And that is why we simply use position sizing, and we bought the 12.5 strike call and we sold the 14.5 strike calls without selling those put options that required a higher buying power. And you can see our trade is still a long bullish trade. As the share price goes up, this becomes more profitable. And you can see that our max profit on the blue line, which is shown over here, is a $161 of profit per trade. And we spent $39 per trade. And so our risk to reward ratio on this trade of 161 reward divided by risk of 39, the cost of the trade, is a 4.12 ratio, which means we could potentially make 412% profit on this trade. So the reward is very much in our favor, but it is still higher risk. And that is why we use position sizing to manage our risk, because we don't necessarily need a lot of positions in order to make a lot of profits on this trade. And so keep that in mind. If you are interested in learning more about our strategies and gaining access to higher quality stock picks based on the data, we'll put a link to our website up here. Let us know in the comments below. What do you think will happen to Snap? Will it snap back up? Or will it crash back down? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.